For those who have been following Warren Buffett like myself, you will know that he has not bought any major stocks in 2020. On the other hand, he's done a lot of selling this year. He sold completely out of his airline stocks. He sold a lot of his bank stocks and a range of others. But buying stocks? Nah, he hasn't really done anything. That is, up until now. I don't know if you guys have heard the news, but finally Warren Buffett is reaching into his checkbook for a $10 billion deal in Dominion Energy's natural gas assets. Okay, so that might sound a bit confusing to some people, so let me break that down. Dominion Energy is an energy stock that supplies electricity for some parts of the USA, as well as natural gas to other parts of the USA. However, Dominion Energy have made it clear that they're trying to become a company that focuses on clean energy production. So this means that they've got a whole natural gas section that they're willing to sell. Warren Buffett, he comes along, he sees this natural gas business for sale, a business in which he is already in, and he decides to buy it at a price that he found appropriate. So what he did was he put in $4 billion and assumed $5.7 billion in debt to buy the natural gas transmission and storage assets of Dominion Energy. So that deal comes almost to a total of $10 billion. Now, the interesting thing is that Warren Buffett was already in the natural gas business before he bought these assets from Dominion Energy. So before this, Buffett's Berkshire Hathaway owned 8% of all interstate natural gas transmission in the United States. After this buy, this number has increased to 18%, largely growing their footprint in the natural gas energy business. So I want to quickly go over the details of this purchase from Buffett before we get into the reasons why Buffett made this purchase and finally opened up his investing wallet this year. So what exactly did Buffett's Berkshire buy? Alright, they acquired 100% of Dominion Energy Transmission, Q-Star Pipeline, and Carolina Gas Transmission, and they bought 50% of Iroquois Gas Transmission System. Berkshire will also now own 25% of Cove Point LNG, which is an export, import, and storage facility for natural gas based in the United States. All included, it's 7,700 miles of natural gas storage and transmission pipelines and about 900 billion cubic feet of gas storage. Gas pipelines and gas storage, put basically. That's the facts of the acquisition, but let's get into the reasons why, which to me is absolutely fascinating. Okay, so we all know that right now in the stock market, it's not easy to find a good deal. Most things are selling at a premium price tag, and that's to say the least. But it does not matter what market condition that you are in, there will always be opportunities. And I don't know if you remember a couple of months ago, there was this big crash in both the price of oil and natural gas. I mean, in just a few months, oil went from $60 a barrel to $18 a barrel, because obviously of the lockdown situation that the world was and is facing. Same with natural gas, it went from being priced at $2.80 to $1.40. This left a range of very cheap stocks in this particular sector. And I actually made a video on this in late April on 3 cheap oil stocks to buy. By the way, the interesting thing was I got a lot of hate in this video on the stocks that I recommended. Just go check out the comment section if you want. Yet, the stocks that I mentioned are actually doing very well. One's up 65%, the other's up 18%, and the other's actually down 3%. It just shows you, never go with the crowd, go with your calculated decision based on the facts. Anyway, let's get back to Buffett. So oil and natural gas was and still is cheap. Well, the rest of the market is expensive. This obviously gets Buffett's attention. I mean, he's sitting on $137 billion of cash and he wants to get this to use, especially if he can find something at a good price tag. So Buffett, he starts to look at the stocks that he can understand, the likes of natural gas, in which he is already in. And obviously he comes across this Dominion Energy deal. Now, I don't know exactly how this works, if Buffett calls them, they call Buffett, or there's some billionaire network that us regular people don't know about. Either way, Buffett manages to find and close this deal. This does put some of his gigantic cash pile to use, but still, he'll have his eyes peeled for some more deals like this for the rest of that $133 billion. Now, for me, there's a couple of things that we can learn from this major acquisition of Buffett's. The first thing is, it does not matter what market that you are in, there will always be deals that come along as long as you keep looking. A couple of months ago, Buffett said, "We have not done anything because we don't see anything that attractive to do. If we really liked what we were seeing, we would do it, and that will happen someday." And which Buffett, he stuck to his word. You can bet your bottom dollar Buffett was in that small office of his, sitting at his dad's old desk, reading through reports, looking for a deal. And eventually it came along because he didn't stop looking. The other thing that I would say that we can take away from this acquisition is that oil and natural gas stocks still appear to be cheap. You see, most people, they look at things based on the very short term. So they think because oil's gone up recently, it must be expensive. But you have to look at things from a long-term basis. You have to. So let's look at the price of oil. 10 years ago, oil was selling for $110 per barrel. Today, $40 per barrel. A big discount. Natural gas is an even bigger discount. Buffett knows this because he's the king at long-term investments. 10 years ago, natural gas was selling at a price of $4.80. Today, it's selling for $1.80. If Buffett made this investment 10 years ago, it would have been 3 times the price. But as we all know, Buffett's investing mantra is buying things at a discount to what they're worth. And it certainly seems that he's done this with this Dominion Energy deal. The third takeaway that I got from this purchase of Buffett was that he's not afraid to go big when necessary. This is his largest acquisition that he has made in 4 years' time. And I often point this out to young investors. If you find a good deal, one that you understand well, don't be afraid to go big on it. As Buffett says, when it's raining gold, reach for the bucket, not the thimble. That's exactly what he's done with this investment here. He puts out $4 billion and he's taken on an extra $5.7 billion in debt to acquire these natural gas assets. And a lot of investors, they're questioning this deal. You see, there's this big movement towards sustainable energy. A lot of governments, people, lobbyists, communities are pushing towards sustainable options. They don't like fossil energy. In fact, I'd go as far as saying that they hate it. This is one of the main reasons why Dominion Energy sold in the first place. Dominion's CEO, Tom Farrell, said that the investment in gas transmission and storage had become increasingly litigious, uncertain, and costly. The other thing that Buffett takes on is tough times in the short term. We all know right now the world just doesn't need as much natural gas as it did last year because we're not operating the same as we were last year in terms of business. So Buffett takes on quite a few concerns with this investment. But what a lot of investors don't take into the equation is the price of these natural gas assets that Buffett is digging his teeth into. At the end of the day, if something is cheap enough, it can always be a good investment. And I bet you Warren Buffett is getting these assets for an absolute song and a dance. Also, let's be honest, at some point in the future, the world will go back to running the way it was, businesses will get back to work, people will start traveling again, factories will be running at full steam. And all of this means natural gas energy consumption will recover in the short to medium term. Also, the long term, I don't think Buffett is as concerned as most investors are on this change to clean energy. Yes, it's all the rage, but let's look at the facts. Globally, as per 2016 stats, renewables made up 24% of electricity generation. So by far, most of this energy is not coming from renewables, and it's going to take a lot more decades before it becomes fully sustainable. Therefore, demand for natural gas will be required in the long term, making this natural gas investment of Buffett's a lot safer than many predict. So we can conclude that yes, Buffett has finally opened up his checkbook for the year, but we have to realize this was because he found a one-off deal in the natural gas sector. As per the rest of the sectors of the stock markets, Buffett is still struggling to find any deals. He's still cautious, he's still sitting on over $100 billion in cash, and he's hoping for more deals like this to come along.